The broadcast is now starting. All attendees are in listen-only mode.
Okay, good evening, everybody. This is Neil Green again with you on the weekly webinar. How everybody's doing? Doing okay. All right. So, welcome. Hey there. Hey, Kathy. Hey, guys. All right. I see a lot of new names, a lot of familiar names as well. So, we got a lot of new guys joining us today. Hello, fellas. You got a very interesting webinar today. It's one of my favorite. And you know what's the webinar about today? You got the subject? Okay, we're gonna talk about the NFP, and on this coming Friday, I'm gonna explain exactly what the NFP is. We're gonna look at some historical NFPs and so on. I would like to welcome you guys joining us on our Facebook homepage at itrader.com. By the way, make it easier on you. Okay, if you want to join us, it's pretty easy. It's for free. Okay, you can ask the guys here. All you have to do is just go, I think, to news, you see webinars, or you can go to, of course, go to our homepage at itrader.com. You can scroll down here and click on join a webinar, save me a seat. All you have to do is put in your first name, last name, and email address. So your or an account manager will be able to contact you back and talk to you. So everybody's ready, and of course, you guys on GoToWebinar, welcome. You have a chat window, so if you have any questions, anything you would like me to clarify, I will try to ask you some questions during the webinar. Okay, I want to see that you understand and that you're with me, guys. And so you're more than welcome to write me down. I'll try to answer all your questions in between. And all right, and so you can use this chat window in order to answer my questions, ask your questions, and whatever you like. Okay, I want to do this webinar more interactive. It's very important for me, you guys, to understand everything because this event, the NFP's event, is a monthly event. All right, it takes place once a month, and if you understand it once, okay, then you understand it forever. So, okay, only sound, guys. Can you see my screen? You asked me if only sound, so are you able to see the screen? You're not? Okay, that's important. Okay, so are you the only one? Is there anyone that can see my screen? Okay, Kathy can see that, so I don't know why. The rest of you? You're supposed to see our homepage at itrader.com, so if one can see, I guess the problem is on your computer, Bram. All right? I'm gonna try to fix it. Okay. All right, so let's get started. All right, I made a PowerPoint for you, and we got some work to do here, and we got to know how to trade this NFP, so let's start. Let's start with the NFP trading. Okay, you guys, do you know what NFP stands for? Anyone, any idea? Okay, NFP, 3 letters, NFP. What does it stand for? Why is it so important? Why is it such a big event? Okay, everybody's talking about the NFP every month. When does it take place? And so on. Just right. So, okay. Ooh, a lot of answers. All right. So, right, the NFP stands for non-farm payroll. Okay, actually measures the number of new payrolls in the period month in the United States of America, which is the strongest economy in the world, as you probably know. And why is the NFP so important? Okay, first of all, the NFP takes place every first Friday of the month, all right? Every first Friday of the month, usually unless the first Friday is on the first, sometimes the second. So it's published the week after, but usually we're talking about the first Friday of every month. We have the NFP, which stands for non-farm payroll. Why non-farm? Because the farming industry has their own measures, their own information, because it's up to the season, right? In the winter we're gonna have less jobs, or more. In the summer we're gonna have more payroll. So the farming industry has its own, but the rest of them under the non-farm payroll. And it's not only the NFP; it's a lot of information. It's all about, I would say, jobs, unemployment, and it's job report, okay, and hourly earnings and so on. How much the salaries, did it get better? Are they weaker, and so on? So if I can repeat what the NFP is, yes, NFP stands for non-farm payroll, right? You're right, Frankie. Non-farm payroll, not non-from, non-farm, not without the farming industry. All right. So we're talking about all the payrolls, all the jobs, all the the new jobs. Actually, the NFP measures the number of new jobs, number of new payrolls, minus the people that got fired. So new payrolls minus old payrolls that are not paid anymore, and we have the number, and it's a monthly event, which means every first Friday of the month, we get the information of the month before, which means this coming Friday, we will get all the information of February, all right, in the United States. How many new jobs, the salaries, are they higher, are they lower, the unemployment rate, and so on. And what I'm going to teach you today is how to read all this information in the market and what assets that is it affect, okay? Because at the end of the day, we're traders here and we want to find trading opportunities according to the event, and that's what we're going to do here today, all right? Trading, that's what we're here for. So the NFP trading. By the way, the NFP is a governmental report. Okay, unless other, beside the fact that it's a governmental report, it's the, I think it's the biggest event of the month. Maybe on March 21st we have the interest rate decision, and this NFP will affect the new chairman of the Fed, the Central Bank of the United States, Jerome Powell. In order to decide whether interest rate will go up to 1.75% or it will stay the same. We're going to talk about it in a different webinar today. I want to focus on the NFP trading, and got some work to do, so let's start. Okay, NFP trading. The NFP will be published on Friday. It's every Friday at 1:30 GMT time, okay, London time. So set your clock, see where you're from and what time it is at your local time. We're talking about 1:30 on GMT time, okay. If you're for Germany, for example, it's GMT +1, and going Eastern is GMT +2. If you're from the UK, it's GMT time. So, okay, so look at your own clock. So we're talking about the NFP will be published on Friday at 1:30 p.m. GMT time, and the same second, okay. So usually this kind of event, you want to be prepared a few minutes before, okay. This event affects the market strongly, okay. This is considered the biggest event of the month. The publication reflects the health of the US jobs market, okay. So actually the NFP gives us the mirror to the US economy situation, which means it gives us the mirror to the capital market and the world economic situation, all right. Now these kind of things affect the market, as I said, very strong, okay. And because this is a governmental report, it's not just a private company report or some kind of a poll or whatever. We really get the information about how many new payrolls we have in the US market. We get all the information about the salaries, about the unemployment rate, and much more. So, and it affects the market strongly, okay. So this publication reflects the health of the US job market, and the question is, can Donald Trump continue to create more jobs with higher salaries, all right? Because this is the major thing, all right. Donald Trump is a Republican, all right. He was elected to be, he's the president of the United States, okay. I don't know if you see it, but the whole world right now politically is going right. In the UK, okay, we have Theresa May, right? The Brexit, right? Leaving, not being a part of the EU, right? In Italy, we have this Five Stars Party that got a lot of power in the election. So they want to do like the Brexit, Italy, right? British exit, Italy leave, and so on. So they're talking about the world right now is going right, and Donald Trump was a big surprise, was elected. Well, we're talking about a year and a half ago, and so. America, for the Americans, and whatever Trump says, he wants the Americans to have more jobs, right, making more money and so on. So the question is, can Trump continue to create more jobs with higher salaries? And let's check it. Now, three main numbers are published on the NFP. You see, this is the difference between being an amateur trader to a professional trader. An amateur trader is one that looks only on the NFP number itself, okay, and then trying to understand where the market is going according to this number, okay. If we have more payrolls than expected, it's usually good for the US dollar. If we have less, it's bad. And then I have a lot of traders calling me and saying, listen, Neil, I was trading the NFP, Okay, and as far as I know, okay, let's say the NFP, the number expected was 200,000, just throwing a number, okay, and the number is 180,000, but still the dollar got stronger. How come? Okay, I don't know if you ever traded the NFP. Okay, sometimes you see that the results are not going accordingly with they don't match the NFP number itself, and there is a reason for that, and I'm going to explain it right now. Okay, you guys still with me? Okay, as I said at the beginning of the webinar, if you have more questions, any questions, write me down in the chat window and I'll try to answer. So 3 main numbers are published on the NFP. The amount of new jobs. Okay, so we have, actually when you trade on any fundamental event, we trade on the difference between the forecast, what we expect the number will be, and the actual. Okay, if the actual is better than the forecast, then we expect certain assets to get stronger. If it's worse than expected, we of course expect these assets to get weaker. Now US traders have the option to trade both ways, right? We can take long positions by buying the asset, and we can take short positions, which is the opposite, by selling exactly the same asset. So for us, it doesn't really matter. Okay, I'm talking in general in the capital market for you guys as traders to understand. It doesn't really matter for us whether the price of the asset is going up, which means we have more buyers, okay, more demand, or we have more supply, more sellers, and the price of the asset is going down, because we can trade both ways. All right, which all we need to understand is the direction of the market. What is the event? What assets it affects? Okay, if the event is a strong event that affects the market or not, and to understand the direction. All right, and this is what I'm going to show you right now. So the amount of new jobs is expected to be 204,000. Wage worth of or hourly earnings, we're talking a rise. We expect a rise of 0.3%, and the unemployment rate is expected to drop from 4.1 to 4%. All right, and expectation may change. Okay, I'm going to talk about all this page right now. Let's go slowly, step by step. All right, if you have questions, you ask me. If you don't, okay, I'm going to go on. So where do we find the information? All right, 2 ways. First, you can use in investing.com Forex Factory. Look at the events of the same day. Here on Forex Factory, you can see 1:30 GMT time. You can change the clock somewhere here. All right, so from the US, you see USD, we have the average hourly earnings, non-farm payroll, and unemployment rate. These are the 3 numbers you see expected to be. This is Friday, by the way, Friday, March 9th, where the NFP will take place. So we have unemployment rate on 4%. NFP, we expect, what we really expect is 204,000 new jobs during new payrolls during February. Okay, we're gonna get this governmental report which tells us how many new jobs we have, and we expect a rise in the average hourly earnings by 0.3%. All right, you can find it on our homepage on iTrader.com. Go to trade. You have under trading tools the economic calendar. Let me show you technically. You just click on that. I think it's pretty easy, right? Just click on that. Set the time to your time. Let's go GMT London. Okay, I can click here. You see, I have all the days: Monday, Tuesday, Wednesday, Thursday, Friday. Works the same way. Let's go to, I don't know, let's do London, GMT exactly. Okay, because I don't know where all of you guys are from, but I guess a lot of you are from the UK, so actually it doesn't matter if I'm doing London or whatever. GMT, okay, and then I'm getting all the events. Let's go to March 9th, which is down here somewhere. Where are you? Oh, there you are. And we have same thing, you see, unemployment rate, you see full star, which means very important event, expect to be 4%. Non-farm payroll, we expect 204,000 new jobs, and average hourly earnings expected to rise by 0.3%. Okay, any rating that will be stronger than these numbers, is it good or bad for the US dollar? What do you think? If unemployment rate will be lower, or people are making more money or more new jobs, is it good or bad for the US dollar? Come on. That's a pretty easy question, I think. That's good, right? Okay, and the opposite. Now you can trade both ways, but let me show you how. Okay, so let's go on. So we have the numbers. right? You see right now where to find it. A lot of people ask me, where can I find the numbers? Now you know where to find it, right? Okay, so let's go on. How do we trade it? All right, so how do we trade it? That's a good question. Thank you for this question. Where are we? Okay. So the amount of new jobs expected 204,000. Great, we know it. Wage worth, hourly earnings, we expect to rise by 0.3%, and the unemployment rate is expected to drop from 4.1 to 4%, which is the lowest that I ever remember in the US. Now, expectations might change after the ADP publication on Wednesday. Let me explain what it is. Every Wednesday, every first Wednesday of the month, okay, every Wednesday that is before the NFP, we have the ADP. Now, ADP is a private company. It's a huge US private company, very successful, okay? They have, I mean, we count them. We look at them as a very, whatever, you know, if they publish something, it's probably true, but they give us the NFP only of the private section. You have to understand that more than 15% out of the US employees work for the government. And it's not a governmental report, but still the ADP is like the private NFP, okay? But only it's a private company's report and not a governmental report. Okay, where can you find it? Here, let's go to Wednesday. Where were we? This is Thursday, Wednesday. Supposed to be on Wednesday. Let's go up here. Anyone sees the ADP? Crude oil inventories, this is a whole other thing. Let's find it on Forex Factory. This is Friday. This is Thursday, right? And on Wednesday we have the supposed to be on. Let's take a look. ADP non-farm, you see, and ADP on 1:15 p.m. on Wednesday. ADP non-farm employment change. The expectation is 194,000, and check it out when on Wednesday. It's gonna give you. It might give you. Okay, not always, but it's gonna give you. It might give you some previous knowledge about what we expect on the NFP itself. All right, so you can use this as well. All right. So new jobs and hourly earnings are the most critical for dollar direction, and let me explain. All right. So when you look, you have to look at the NFP and the average hourly earnings, because unemployment rate is expected to be 4%. If it's going to be 4.1 or 4, or maybe 3.9 might be a deal breaker. But as long as it's under 5, we have full capacity, which means most of the Americans that can work are working. Okay, we have 96% of employment. It's great, but who cares if we have the unemployment is so low if people are not making money and we don't have new jobs? So this is what we want to go into details. The unemployment rate is very important, but if it's going to be as expected 4% or 4.1 or 4.2, it's bad. But 3.9 around there, what usually happens, they don't really make mistakes with the unemployment rate. If it's going to be 4% as expected, it might not affect the capital market, but what does affect is the new jobs, and the hourly earnings are the most critical for the dollar direction. Now, new jobs, okay, are quantity of work, and hourly earnings are quality of work. Right? Why? New jobs, the NFP, is quantity. We count how many new jobs, okay, how many people got hired, how many people got fired, and then we know if you have more hired people than fired people, it's good for the US economy, right? Sounds reasonable, right? It's not logical. You don't have to be, you don't need to get your PhD to understand what I just said, right? So if we have more people hired and more people got fired during last month, during February, it's good for the US economy. So new jobs are quantity of work, and hourly earnings are quality of work, which means why do I care if I have more people employed if I don't make money? Right? Think about it. You go to work all month and your salary is less than what you expect to get. So it's not good, right? So we want to look at these two details, all right? We want to look at the NFP. Of course, if unemployment will be 4%, around 4%, so we want to look at the NFP itself and on the average hourly earnings, all right? So usually the market first 2 minutes, first 5 minutes, first 15 minutes reacts only to the NFP. And then the big money is coming and looking at the unemployment rate, at the average hourly earnings, and make decisions. All right. Now, quantity and quality are equal in their importance for the NFP trading. This is why I call the people that trade only based on the NFP number itself amateurs, and the people that know how to look at the whole report professional traders. All right. Because you don't want to look only on the quantity, you want to take a look at the quality. Right? If we have more people employed, do they make more money or not? Our salaries are higher or not? Therefore, traders need to take both into consideration. All right, are we good? Can we go on? So we have quantity, the NFP number, right? And we have quality, which is the average hourly earnings. Good. How to trade? Okay, now we got all the numbers. How do I trade? All right, so volatility traders will look for a match. What does it mean, a match? A match means that the quantity and quality point to the same direction. Good or bad, it doesn't matter because we can trade both ways. Okay, for example, if unemployment rate is going to be 4% as expected. Okay, let's try it out. Because a match, okay, let's go on just a second. A match can generate very strong trends by the dollar and gold. Okay, let's stop here and try to understand. Quantity and quality, all right? So if unemployment rate is going to be as expected 4%, okay? And we're going to have, and the NFP, the number will be significant, it doesn't matter, it's going to be higher than 204,000 new jobs. And the average hourly earnings will be higher than 0.3%, the forecast that we just saw. What do you think, okay, according to your opinion, will happen to the US dollar a second after this report will be published? Come on, guys, give me some answer. Do you think it's going to go up or going to go down? And we're going to check it. I'm going to show you previous webinars. I want to show you the reaction, the behavior of the market. So if the NFP is better, think about it again, guys. The NFP is better than expected, which means more people were employed, okay, than expected, right? And the average hourly earnings is right. And the average hourly earnings is better than expected, which means more people were hired and making more money. Is it good for economy or not? That's pretty basic, right? More people have jobs, more people are making money. Sounds great, right? So we expect the US dollar to get stronger. Now, when the US dollar is getting stronger, what happens to gold? Okay, I talked about it on past webinars. We have opposite correlation between US dollar and gold. Okay, gold is parking lot of all currencies, especially the US dollar. When the US dollar is getting stronger, gold is getting weaker, and the opposite. Okay, because gold is a safe haven. When people don't know where to put their money, they put it on gold, and it works with an opposite, actually direct opposite correlation with the US dollar. If you look at the history of these two assets. All right. So if the dollar is getting stronger, right, Kathy, we expect the gold to fall, and the opposite. If the dollar is getting weaker, so you can diversify your portfolio. You don't have to trade only on one asset. You can trade on more. Okay, just showing you the assets that the NFP affects. So a match means that the quantity and quality point the same direction, whether bad or good, and a match can generate very strong trends by the dollar and gold. Mixed results, okay, which means NFP higher than expected and average hourly earnings lower than expected, or average hourly earnings better than expected and NFP is lower, okay, don't point the same direction. In that case, traders can open shorter positions and wait for a potential trend. Okay, you want to see who beats each other. So what I usually do, okay, me personally, I would wait just a little bit, okay, to see, let's say, for example, if the NFP number was 204,000 and we had 300,000 new jobs, okay, but the average hourly earnings was 0.2, which was expected to be 0.3, okay, I would wait, but I guess in this case that the US dollar is getting stronger. You know what? Let's take a look at the last time. Let me show you something. Let's take a look on, let's open the calendar here. And let's go to the last NFP. This is March right now. And let's go to February 1st. February 2nd was the first Friday of February. Can you see that? Just click on that, apply settings. And it's going to give me the whole month. Okay. Anyhow, let's just give it a second. And let's try it together, guys. I want you to do it with me, all right? We see last NFP, we said every first Friday of the month. Let's take 1 month backwards and talk about Friday, February 2nd, okay? 1:30 p.m. GMT time, exactly the same time when this NFP will take place. We have the average hourly earnings, non-farm payroll, unemployment rate. Let's read all of them, okay? Unemployment rate, we expected 4.1% a month ago. This is about for the details for January. It was published on February, on January. So we expected 4.1% on the forecast, and the actual was 4.1% as expected. No news is good news, right? Okay. Then the non-farm payroll, we expected 181,000 new jobs, and you see painted green, we had 200,000 new jobs. More jobs, more people were employed. That's good. Average hourly earnings, we expected the average hourly earning to rise by 0.2%, you see the forecast, but the actual number was better, 0.3%. Is this a match or not? Look at these three numbers, okay? Do you see the match? The NFP better than expected, average hourly earnings better than expected, unemployment rate stayed the same. What do you think happened to the US dollar? So it's always, Kathy, it's always forecast versus actual. Because try to understand, in any event that you trade, all right, you trade, what is the capital market? Capital market is based on expectations, that's it. Only expectations, because who's trading in the capital market? People, okay? And people think the same, okay, just like me and you. Some people are part of companies, they have more money, they have less money, they have more affection on the capital, on the assets, they have less of it, doesn't matter. It's people. And people think like people. We all think, okay, the psychology in the capital market is very important for you as traders to understand. All right? So you say, yeah, so dollar will be launched, right? Brad, that's, by the way, can you see the screen now? You had the technical problem at the beginning of the webinar, so I don't know. Okay. Ah, yes. All right. I'm happy. All right. So let's check it out. Okay. So you say the US dollar is going to get stronger. What do you think happened to gold? We said opposite correlation. If the dollar is getting stronger, what happened to the gold? Gold will fall. All right. Let's check it. Let's see if we were right. So we're talking about February 2nd in the afternoon. Okay. My clock here is on Cyprus time, so you're gonna see the hour of 3:30, not 1:30. Okay, euro versus the dollar. Okay, this is a daily chart. Let's just try to understand. If the euro versus the dollar goes up, does it mean that the dollar is getting stronger or weaker? This is a daily chart. You see, everybody knows the MetaTrader, right? Daily chart. Each candle is 1 day. This is the euro versus the dollar. When I see a green candle, it means that the dollar is getting weaker. Okay, because the euro, the major currency, is getting stronger versus the secondary currency. When we see red candles on the euro versus the dollar, it means that the dollar in this case is getting stronger versus the euro. You have to understand the order between them. If I look on the pound versus the dollar, same thing. Green candles means that the pound, the major currency, is getting stronger. So if the dollar is getting stronger, we're going to see some red candles here. If I look at the dollar versus the Japanese yen in this case, okay, you can see that the dollar is the major currency. Therefore, green candles would say that the dollar is getting stronger, and red will mean the opposite. Okay, I just want you to understand, because a lot of traders are asking me how to read the chart technically. It's important. Okay, you got it? Can we go on? Okay, no questions is good. It means that that we're doing good here. Okay, so euro versus the dollar. Let's go. I put some support. This is from last webinar, by the way. Support and resistance. See, we put it. It was a week ago. It touched the support, goes up. Maybe I know something about trading. What do you think? Okay, let's take these two lines down. We don't need it now, and delete. Okay, let's keep going. Let's go to half an hour chart. Each candle will represent half an hour. Let's cancel live and go backwards to this is March, February 2nd. You see I have a data window here, so I can see the dates. And I want to look for February 2nd. Okay. Okay, February 2nd, you see 330, which is your 130, okay, because this MetaTrader is set on GMT plus 2, okay. This is the half an hour after 1 hour, 1 hour and a half, 2 hours after the NFP was published, 2 hours. Did the dollar get stronger or weaker? This is the euro versus the dollar, just to remind you. You see that it got stronger? Okay, so we're talking about from the open price here of 1.24, almost 25, all the way down here to 1.24. So we're talking about 100 pips, almost a cent. All right? Do you understand that? Did you know that the dollar is going to get stronger according to the information that I showed you? NFP was better than expected. Average hourly earnings was expected to be 0.2 and it was 0.3. Right? Let me show you again, guys. Take a look at this. Again, average hourly earnings, we expected 0.2, it was 0.3. People are making more money, great. We expected 181,000 new jobs, we had 200,000 new jobs. Wow, great. Unemployment rate was expected to go down to 4.1%. This is what happened. No news, good news. Whatever the analysts believed that will happen, did happen. Okay? You guys said that the dollar got stronger. This is the last NFP. I'm not going 5 years ago. I'm talking a month ago. This is a monthly event. So the dollar got stronger. You see the euro versus the dollar went down. Okay, 100 pips. Okay, let's say I have an account of whatever, 50,000 euros in this case. Back then, okay, 500 euro per lot because it's 1 to 200 the leverage, 100, it's $1,000 per pip. So in 2 hours, we're talking about back then, if I would do that, okay, $1,000 multiplied by 100, we're talking about $100,000 out of 50,000 euro trade in 2 hours. It's 200% over your portfolio, 300 actually, because this is all profit. So, okay, this is if you read it back then. Now this event on this coming Friday is the same event. Good. So the pound versus the dollar. Okay, let's go to the same date. Let's just do February 2nd. February 2nd. You see pound versus dollar, same day, 3 hours. Dollar is getting stronger. It went down. Dollar versus the Japanese yen. Okay, 2.2. Dollar versus the Japanese yen got stronger. The dollar got stronger. Here is the major currency. And you said that gold fell down. Gold by 2.2 February 2nd. This is the gold. Opposite correlation. Any questions about what you just saw? Okay. Do you think it's easy or hard to read the NFP? You know what? Let's go on with the okay, mixed results mean quantity and quality. Okay, usually the market first reacts if we have mixed results. Okay, the NFP is better than expected and average hourly earnings is worse or the opposite. Usually, just for you to know, out of my experience, and I have some years of experience, usually the NFP reacts first. Okay, the market, I'm sorry, reacts to the NFP numbers first and then to the average hourly earnings. Okay, because the amateur trading is the small money. The first 15, 30, 45 minutes are going with the NFP number itself, and then the big billions or trillions are going with the whole report and reading the unemployment rate and the average hourly earnings and so on. Okay. Markets always. You were trying to write always volatile before NFP. Right. It's very volatile before the NFP. Okay. By trading before the NFP is a gamble because you don't have the information. Right. What you can do. Okay. So best to wait a few minutes after the publication. Okay. It depends. This is a very good question, Kathy. Thank you for that. As I wrote here, in that case, if we have mixed traders can open shorter position or wait for potential trade. Now if we have a match, if the NFP and the average hourly earnings are going the same way, all right, so there's no question, right? Just like we had on the last NFP, I just showed you, right? No question. If we have mixed results, okay, You might want to wait a few minutes and see the reaction and the potential trend, and to understand. It depends. It depends if the NFP was much higher or much lower than expected, and the average hourly earnings, and look at the unemployment rate and try to look at the market, okay, and understand the direction a few minutes after that. All right. Now, traders are recommended to create trading setups on major currency pairs. Trading setups are good for pending. Okay, let me try to explain. Let's read the whole page and then going pending orders. Yeah. You know what pending orders is, right? We talked about it on, I think, last webinar, so might be right. Yeah, buy limit, sell stop, buy stop, and so on. Okay, let's read it and try to understand the whole page. Now, traders are recommended to create trading setups on major currency pairs. First of all, any trade that I ever trade, okay, I combine the fundamental analysis, just like we did now. Okay, you're reading the NFP and the average hourly earnings and the unemployment rate, and this is fundamental analysis. The idea is to look at the market to understand where it's going according to the numbers. But technical analysis is nowhere to put the support and resistance levels on the assets that we want to trade it on, and we can do that. We should do this setup before the event takes place, a few minutes before that, or half an hour or an hour before, okay, to understand the highs and the lows. Okay, now traders are recommended to create trading setups on major currency pairs. Trading setups are good for pending orders because they show support and resistance levels, right? You understand why? Because if I want to do sell or buy, okay, I'm gonna have a stronger, I would say, confirmation after I get the fundamental results based on the skill levels, on the support and the resistance. Okay, for example, let me show you. Here, okay. If I'm looking at the euro versus the dollar, all right, let's go live right now. Okay, on this half an hour chart, I'm just showing you live. Everybody agrees that this is a support and this is a resistance level, right? Okay. So usually, okay, pending orders. Usually, I would like to put my buy limits on the support levels and my sell limit on the resistance levels. All right. This is this is just talking technically trading in general. All right. During the NFP, what we actually have is you can do the setups, do it on a 1 hour chart maybe, and understand the highs and the lows, and then you can use pending orders as well. See, if the market went the other way, you can always open a new opposite position. All right. Good. Be smart traders, guys. Okay. Let's go on. So trading setups, we talked about penny. Okay, a match could generate 70 pips. Last time it was 100 pips, 1 cent. I showed you 70 pip movement and more by major currency pairs. Gold can move more than $20 on a match, which is a lot. All right, this is why it's such a big event. Last NFP provided a match, as I showed you. Right, we saw the match between the NFP that was positive and the average hourly earnings. Mixed results are great for reversals or consideration trading. Okay, if you look for reversals, okay, if you want to take a few short positions, not short positions, like short-term positions, right? And then mixed results are good for that because you're gonna have both ways, and then the support and resistance levels will give you much more, will be much stronger, will have more effect on trading itself. And of course, good luck. All right, guys, any questions? This is the time. I'll give you a minute. We have nothing here. There you go. Okay. Any questions? Anything you didn't understand? You would like me to repeat, to clarify? Ask me. Okay. I want you to know how to trade this event and make the best results out of it. In the meanwhile, just to show you what is my expectation, I don't see. The idea is I'm not the U.S. government. Okay, maybe I know a bit about the markets, but I'm not sitting in the U.S. government yet, and I don't expect. I work with the details that I have. Okay, so I don't know what we're gonna see. MT4 platform, seriously, like during the event, how to overcome this risk? What do you mean? What does it do during the event? You see what it goes up and what? Do you know how to open a trade? Okay, let me show you how to do pending orders. Okay, euro versus the dollar. If I go double click, it opens a pending order window, right? Okay, sometimes the platform is slow. I don't know. At the beginning of the webinar, you didn't see the screen, so no, I don't know. For me, it works perfectly. So, okay, I don't know. Technically, it works perfectly for me. I have high-speed internet, so I don't know. Buy, sell, how many lots you would like to take, stop loss and take profit. Everybody knows how to use, right? Nor during the NFP. Okay, try to because of the volatility. Okay, try to catch it fast, and you can use these pending orders. Okay, and then if it's gonna catch it, you don't. The MetaTrader will do it automatically. If you put a price on buy limit, if you want to buy in a lower price, or sell limit if you want to sell in a higher price, and of course you have to set the price, how many lots, and stop loss take profit according to the new price. All right, guys. Okay, so hopefully technically it's gonna work out for you. It's important. What I started to show you guys on Facebook, I showed at the beginning of the webinar. Next time, just go here to news webinars, so down there, click on webinars and register with your first and last name. Then the account manager will contact you back. Any further questions that you have, you are more than welcome to contact, of course, your account managers right now or tomorrow. Talk about the NFP. Ask questions. This webinar, just like any other webinars that I'm doing, will be published on our homepage on Facebook. So if you didn't watch the whole webinar, if you want to rewatch it, you're more than welcome to go to the itrader.com page on Facebook. And Manchester City are about to be champions in England. That's good for us, right? Unless you're a United fan. Okay. I would like to thank you very much for participating. Hopefully you will make the best out of this NFP and the rest of the events. I'm going to be here next week on Tuesday on 6 p.m. GMT time at the same time talking about the next topic. And Kathy is saying thank you for another great webinar. You're more than welcome. Okay, great. Thank you guys. I'm going to be here next week talking about the next topic. And hopefully you'll do good and trade smart. Thank you very much for participating. Bye-bye.